Hello and welcome to the Switzer program. This is a special event tonight. We're going to focus in on debt. We know the government tells us there's a debt emergency, and so I put together some of the best economists in the country. They might feel a bit blushed that I should say that, but they're people who I respect. We've got Halmarick from Colonial, Creighton from the Australian newspaper, George Boubouras, the Chief Investment Officer at Contango Investment, and we have Marcel von Pfyffer, who's from Arminius in Brisbane, and we're all going to talk about the key issues around the debt. We'll look at the size of the debt in Australia, we'll compare it to other countries, we'll ask the question, how worried should we be about this, and finally, what should the government do to fix it all up? But before that, let's go to Carolyn Herbert with today's major business stories.
Good evening. The share market has closed at new post-GFC highs in a volatile session as upbeat earnings results from BHP Billiton and QBE Insurance pulled the market up. The ASX 200 index rose 0.3% to 5,923, while the All Ords was up 0.3% to 5,890 points. The Aussie dollar was buying 77.75 US cents at the close of trade. A solid set of numbers coming from BHP Billiton against the backdrop of falling commodity prices. BHP Billiton has posted a 47% decline in first half profit of $4.2 billion US. Revenue dropped 12%. On an underlying basis, the result beat expectations. CEO Andrew Mackenzie says he remains confident about the outlook for the company despite significant falls in commodity prices. He expects sustained growth in China, stronger consumer spending in the US, and lower energy prices to underpin an improvement in global economic activity over the remainder of 2015. BHP is overhauling its strategy to focus on producing iron ore, copper, coking coal and petroleum. The company has reiterated its focus on returning cash to shareholders, saying any return from the South 32 merger will come in addition to dividends. Investors will receive an interim dividend of 62 cents per share. Insurance giant QBE has lifted its dividend to shareholders after returning to profit with its full-year results. QBE made a net profit of $742 million US for the 2014 calendar year. That's compared to a loss of $254 million US a year ago. The insurer announced a final dividend of 22 cents per share, up from 12 cents a year ago. It expects the strengthening US dollar to weigh on its gross written premiums in 2015, while global pricing is expected to remain broadly flat. QBE will also sell its Australian underwriting agency business for as much as $348 million after offloading its US agency last month. Flight Centre has reaffirmed its full-year guidance despite posting a 9.5% slide in first-half profit. For the 6 months to December, net profit came in at just over $100 million, down from $111 a year ago. Underlying profit was also down, but revenue showed an uptick of over 4% to $1.1 billion. While the company says trading conditions in Australia are recovering slowly, it has not changed its full-year target between $360 and $390 million. Flight Centre will pay a fully franked interim dividend of 55 cents a share. Qube Holdings has delivered a record 26% jump in underlying net profit to $54.7 million. The transport and logistics business saw revenue increase by 25% to $727 million. Qube posted an interim dividend of 2.7 cents a share compared to 2.4 cents a year earlier. Managing Director Maurice James described it as a pleasing financial performance with record results achieved despite challenging economic conditions. And that's the latest in business news.
Thanks, Carolyn. Before we start, let me reveal that I think our debt is not a big worry just now, and I think we can afford to grow the economy to bring down the budget deficit cyclically. And once the economy is growing at a good clip, then the government could cut spending and even raise taxes to beat the debt problem before the next GFC turns up. However, I am willing to believe that I could be wrong, so I have assembled my 4 guests to give me some alternative points of view. In studio with me, we have Stephen Halmarick, who's Head of Investment Research, Colonial First State Global Asset Management, longest title in the history of economists worldwide. Creighton, economics correspondent at the Australian newspaper. In Brisbane, we have Marcel von Pfyffer, who's the MD of Arminius Capital, a former economist at Morgans, and George Boubouras, who's an economist, econometrician, and a Chief Investment Officer at Contango Asset Management. So we've got economists laid on, all from different points of view. So let's kick off by focusing on how big is our debt and how big is it on an international comparison basis. Stephen Halmarick, would you like to kick off?
Sure, and I think we actually might have a chart of this, but Australia's debt's actually quite low by international comparison. The media review shows it peaking around about 17% of GDP.
Are we talking net, Stephen, or gross?
That's net debt.
Okay.
So 17% of GDP.
So here you're looking at the chart, sorry to interrupt.
On the far left.
The bright blue one, that's Australia. Germany, UK, USA, Spain, Italy and Japan.
Yeah, so we can see the average, well, the average of all the other OECD countries is about 75% of GDP.
Yeah.
Countries like Japan's over 140, and that's kind of the basket case. Like Greece is 175.
Yeah.
So I'm not saying we want to go anywhere near those countries, but from where we're standing now, the level of government debt in Australia is quite low.
Okay. Now, Adam, you would have known that.
Yeah, that's true.
Is that a good portrayal of what our debt situation is?
Look, it's not a bad portrayal. I personally like to see the state government's debt also added in, and also local governments. But even when you do that, frankly, on a net basis, you're still only around 20 percentage point mark, and that is globally still very low, and it's only going to rise to be slightly below 30% over that period that you just showed on the graph. So, so even if you include, the fairly substantial governments of New South Wales and Queensland, etc., it's still fairly low. On a gross debt measure. Currently, S&P says Australia, including all tiers of government, is about 33%. And so again, the US is about 100%, and so is the UK, roughly 100%. So, Australia, in gross debt terms, is also relatively lacking in debt.
Okay, right. So, so far we've seen that both economists in Sydney say that this is the size of debt. It's not all that great. It doesn't mean that we have to ignore it, but we'll certainly get to that in a second. Let's go to Marcel in Brisbane. What's your take on the size of our debt?
Peter, look, again, the size, relatively speaking, is okay. I'm more from the perspective the same as Adam. I like to look at things on a gross basis. I have a chart which I sent to your studio, which is the first chart, I think resplendent in blue and orange or so. So if you pop that one up.
Okay, keep talking.
What I've got there, I've got the comparison. This is purely for Australia only, not in an international context. But I would say that our government, the general gross position as a percentage of GDP is about below 30%. Again, I've put two definitions there. This is sourced from the IMF, and to be thoroughly and entirely pedantic, we like to view things on a gross basis, simply because people who lend money out often like to get it back at some point in time. So the gross... Yeah, isn't it just? So the gross calculation actually incorporates all the interest payments that the debtors owe the creditors at some future point in time. So again, look, not to put that issue on its own, but as the other gentleman said, relative to Japan at 245% on a gross level, the US are about 106% on a gross level. Australia, I think, is only beaten in the G20 by Saudi Arabia, Peter. So no, 31%, or whichever way you cut it, if Stephen wants to talk about net debt. Australia is one of the most prudent countries we can look at on our radar, Peter.
Okay, now, just going back to that chart, the brown ones, of course, was the gross debt. The blue one was net debt. When it dropped below the line, was that when John Howard and Costello were in power and government budgets were in surplus?
Surplus, yep. So the graphs there, it's actually inverted, Peter. So when it is below the zero line, that's actually running a budget surplus, of course. And I want to come back to that graph when we talk a little bit later on, just about where we are in the debt cycle now, given where we were as we entered the 1990s recession.
Okay, let's go to George in Melbourne. This is a bit like four-way turf talk, isn't it? But we're talking about more important things, namely Australian debt. George, what's your take on Australia's debt?
Yeah, hi Peter. Look, broadly in line with everyone's observations. I like to look at it as federal, state and at the local government level. I'm indifferent from net to gross, and in the relative sense we are quite low versus other OECD. But that really doesn't really give you a picture, and it puts no perspective, because debt's not about government. It's got to be including private and government, but that's another story for later on in the show, and they're not very good levels. And also the direction. Australia might have good relative rates versus those economies, but given where we've come from, it's an abysmal situation to be, because we should have been running more consistent structural budget surpluses, obviously, through that cycle, which obviously would have impacted these numbers down the line as well. So it's where we've come from. It's not ideal. And to hang our hat on and say, because relatively we look good against Japan, well, the Japanese corporate private sector looks quite good versus Australia. So you need to look for like for like. I don't like the direction as an investor, and I invest obviously for superannuation, for retirement needs. So it's not a good situation, and it should improve from my perspective.
Okay, so far we all agree, and so let me try and come up with a topic we might agree on. When Labor decided that we were possibly heading for a very serious recession after the GFC, they decided to spend and prosper. It was typical Keynesian economics, wasn't it? And Ken Henry was a great supporter. I think most of us would agree that Ken Henry is a pretty good Treasury official. And some people have debated about whether they should have actually spent the way they spent. Adam, let's go to you first, because you would have covered it in the newspaper. Were you a supporter of spending money to avoid unemployment going to 10%, because we ended up going under 6%? Was the idea to spend then an okay idea?
Look, I mean, I think it was a very bad idea. I mean, we had the third largest stimulus package in the world, I think, behind the US and South Korea. I mean, the US's package was even larger, and in the US, as the economy showed there, the package was largely unsuccessful. The US economy only very recently is starting to come out of its economic crisis. Look, I mean, the problem with Keynesian economics is you can choose your empirical research to back it. There is an equal amount of research that shows it's rubbish. I mean, I think as a logical proposition, it's just wrong, because ultimately the government doesn't have any of its own money. It only essentially takes from the taxpayer and can bring spending forward.
Yep.
I don't think people are that stupid, and so I think what you see in the evidence is when the government borrows and spends more and increases its debt, then the private sector saves a lot more, and that is exactly what you've seen in Australia actually since the GFC. Private saving has gone up dramatically, almost exactly offsetting the level of public discipline.
But what could we have done to avoid the kind of alternative where unemployment might have gone to 9 or 10%, and those price signals, market signals...
Look, I mean, I'm certainly willing to concede that the unemployment rate may have gone up a little bit more than it did. I mean, that said, it still did go up quite a bit. I mean, indeed, I think we basically had a recession. It's just that Australia has very strong population growth, and that basically covered it up. But certainly, if you do it per capita, we had a recession. There's no question about that. But look, I just think that basically, look, you know, this might sound mean, but I would rather have a slightly higher unemployment rate in the short term and a lower one in the long term. Because I think once you get that government spending up, it's very, very hard to bring it down again because of the nature of government.
Yep.
And so I'd be very reluctant to spend a lot to so-called save jobs.
How about you, Stephen? Do you agree with that?
Well, I think we had a combination of easing. So the Reserve Bank cut interest rates, so monetary policy easing. The dollar fell at that time, so some support from the currency.
Yep.
So a little bit of fiscal easing was probably the right thing to do as well. I think in hindsight...
Was that a too tough a view from your point of view?
I think it was probably maybe too much of a fiscal easing and probably on the wrong things.
Yes.
So you could probably argue maybe the pink bats wasn't a great idea in hindsight.
What about the $900 cheques? What do you think of that?
Yeah. Well, I don't get one.
That's right. They probably worked, but we could have done something better probably.
Yeah, I think that's right. But, you know, at the time, you know, I was working for a US bank at the time when the GFC hit, and I can tell you it was pretty bad.
Yeah.
And, you know, so I understand the response from the government of the day to say, look, you know, we need to do something here because the world's in big, big trouble, which it was.
Yeah.
So, you know, I can understand their response, but in hindsight, maybe it was too large. But also, you know, it's now the ongoing spending that's the problem.
Yeah.
You know, we're not collecting enough revenue for all the things that the government wants to spend money on.
Exactly.
And, you know, that's where the mismatch is.
Yeah.
So I agree with George's point earlier that, you know, so the level of our debt is not that high, so that's good, but the trajectory is, you know, something that's a little bit worrisome.
Yeah. Marcel, were you a supporter of the spending program at the time? My view is I didn't mind them spending at the time, but I would have liked them to have shown a lot more guts in reining in the spending, but because the Labor government was so unpopular, they had to come up with alternative, you know, love me type programs like Gonski and whatever.
Embarking upon populist discretionary spend is always, in the long term, detrimental to the economy, Peter. The premise of why they did it is because, as you alluded to before, under the Howard Costello era, they did build up the kitty, so there was money there to spend. I would argue that Australia actually totally avoided the GFC, thank you primarily to China, because of the huge reliance that we had on the commodity exports in this country at the point in time. from an economist's perspective, what the guys tried to do in the middle of the GFC was enact the Keynesian fiscal multiplier, which in English is to try and get the best bang for your buck out of every dollar that a fiscal stimulus package spends. Now, notwithstanding that it's nice in 2020 hindsight to look back and poke fingers and holes in what happened, but again, the empirical research that's come both out of Australia and also, as the other gentleman referenced, in the US, I think what Adam said as well, is that the efficacy of the fiscal stimulus packages that both Australia and the US actually embarked upon in the wash, Peter, actually ended up contributing very little to actually what helped the economies themselves go through the GFC. So, yeah, from my position, they spent it on the wrong things. You want to talk about infrastructure spend in present day in 2015. I think that a very wide program of infrastructure spend to help bolster the resources, not as in commodities, but the resources of the Australian economy could have been better embarked upon back in 2007 with that $52-odd billion that was spent.
Okay, we're out of time on that particular segment, George, but we will come back to you. After the break, just how worried should we be about our government debt? That comes up after the break.